Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And okay, so we've been talking about the housing market for years, and we explained how this would all come down eventually because we saw such a huge amount of overvaluation in places like LA and Seattle, throughout Ohio, New Jersey, in Canada, and places like Vancouver and Toronto, throughout the world, in London, England, and Sydney, Australia. I mean, the list goes on because we're seeing a lot of the same practices used time and time again in the same places, and that is vast market manipulation and overvaluation. And we see massive bubbles, and we see the banking system getting involved with collateralized debt obligations, mortgage-backed securities, subprime mortgages, all, the credit default swaps, all the usual stuff. And we've seen it before, and we're seeing it again. And we're seeing the end point of it because, okay, I'm about to go into an article here about a guy by the name of James Stack, who's a very popular investor, talking about how, they mentioned that he predicted all of this in 2008 and predicted the 2018 slowdown. But I have to also mention that it wasn't that hard to predict all this stuff. I mean, most people who've studied the market, period, throughout history, they see this stuff repeating time and time again. So I'm going to go into this article here. I just wanted to give you guys that context, but the article from Zero Hedge says, "Worst is yet to come," says housing bear who nailed 2008 crash, 2018 slowdown. And as the article goes into, Montana money manager James Stack, who predicted both the 2008 real estate crash and last year's housing slowdown, now says that 2019 may not be so great for housing bulls, according to Bloomberg. And I quote, "Housing could be heading for its worst year since the last housing crash," said the 67-year-old Stack, who manages $1.3 billion for high net worth clients. "Expect home sales to continue on a downward trend in the next 12 plus months. And there's a significant downside risk to housing prices if a recession takes hold. Last January, Stack was practically alone when he warned rising mortgage rates would expose housing's affordability problem and the risk that today's highly inflated housing market will again end badly." He wasn't alone. We talked about that. But anyway, going on. The day after Bloomberg published his comments on January 22nd, homebuilder shares began a 10-day slide and ended the year down by more than a third. Stack, who manages $1.3 billion for people with a high net worth from his office in Whitefish, Montana, studies his fireproof files of newspaper articles on bear markets dating back to 1929. He predicted the housing crash in 2005 just before prices reached their peak. Last year's warning came after Stack noticed that his housing bubble bellwether barometer of home builder and mortgage stocks was up 80% in a year, a sign that investors once again had gotten too exuberant. And nearly a year after Stack's accurate 2018 call, property markets, along with the broad economy, are flashing signs of distress. According to a National Association of Realtors index, home purchase contracts in the U.S. fell 7.7% in November, while consumer confidence dropped in December. Meanwhile, as we reported last week, the Institute for Supply Management, a gauge of U.S. manufacturing, plunged from 59.3 to 54.1, the lowest print in the MFG ISM series since November 2016, and the biggest one-month drop since October 2008. And in November, pending home sales plunged 7.7% year over year, the biggest drop in 4 years. As Bloomberg noted at the time, the result underscore the challenges as elevated prices and rising mortgage rates are keeping more Americans on the sidelines of the housing market. Economists consider pending home sales a leading indicator because they track contract signings. Purchases of existing homes are tabulated when a deal closes, typically a month or two later. The recent rise in mortgage rates has reduced the pool of eligible home buyers, Lawrence Yun, NAR's chief economist, said in a statement. "While the job market looks strong, making long-term prospects look solid, we just have to get through the short-term period of uncertainty." Pending sales fell in 3 or 4 regions, led by an 8.9% slump in the West, as the Midwest and South also declined. Signings in the Northeast rose 0.7%. So I want to kind of talk about this a little bit because as he kind of mentioned that the job growth looks good long-term, Well, we went into that in a recent video, and it doesn't seem that way. I think, first of all, we have to remember that the job numbers are hidden in the labor force participation rate. So after a certain amount of time, people are no longer considered, unemployed, which is just a really shady way to manipulate the numbers to make the government at the time look good. Anyway, they've been doing that for a long time through many presidents. Now, with the case of job growth looking good in the near future, we also recently reported in the same video about how there's been a ton of layoffs in the construction field, and we saw a 10K jump in layoff reports from 221K to 231K, which we chronicled in one of our latest videos. So, John, with all this in mind, where do you see the housing market going in 2019, 2020?
The housing market is going to go, very low in my point of view. And we're going to see a lot of bubbles that have been, gaining mass momentum around the world, deflating. The main reason is because we have so much debt in the world. There's been printed utterly amounts of money into the world. And now we're seeing the big problems, around the world. And of course, there is a lot of less dangerous bubbles around the world, and you mentioned some of them, and I would just like to show you the recent UBS numbers where they show Hong Kong at the top, then Munich, then Toronto, then Vancouver, Amsterdam, London, Stockholm, Paris, San Francisco, then you have Frankfurt, Sydney, LA, Zurich, and Tokyo, plus Geneva and New York that are in kind of, inching towards, they're in overvalued or bubble territory. So you're seeing a lot of the real estate around the world has been rising to unsustainable levels. And the main reason is, of course, the oversupply of cheap money that has been perpetuated by all the central banks around the world. They have screwed up the whole economy and created bubbles everywhere because of their mass issuance of currency. And of course, they've been promoting this big time by letting the currency be so cheap and manipulated next to zero, and in order to get people in that are not supposed to have any mortgages, that cannot afford them, but they entice them to get involved. And as interest rates inches up 0.25% or 0.5%, people are starting to go bust. They can't pay their mortgages anymore, but that's insane. Back in the day, in the 80s, when they actually had a real massive housing bubble and the markets worked as they should, mortgage rates went up to 18 to 20%. And now today you're seeing them being fearful of them inching up to 5%. That just shows us how much money has been printed and how overvalued the markets are compared to what they were back in the day, when people were having problems, of course, with 18% paying that. But today they're having problems paying 3% or 2% or whatever they have at their mortgage, which is it's getting very insane around the world with all these overvaluations. And of course, with the slowing economy around the world as well, on top of that, you are seeing the shocks are just going to come and hit, and one shock after another is going to hit the housing market, because the housing market is kind of the health of the economy, because when people have money, they go and buy real estate in order to have a nicer house or all that stuff. But that's not happening now. And as you see the mass amounts of accumulation of debt into the real estate markets around the world, as it's shown on these UBS Global Real Estate Bubble Index, it just becomes very clear that we have some serious issues, and there's no way to exit out of this unless you actually can use debt. The only way for people to actually understand this is to use debt in a proper way, not like they are in China, where I think we covered back a while back where Chinese are having a third home now, and a substantial amount of people having a third home in China because of the mass amounts of printing of debt. That's all that it is. It's the oversupply.
Meanwhile, there's millions and millions. What was it? 50 million homes empty in China as well.
Oh, of course there is, and but China is kind of the craziest of them all, because they've been building ghost cities in order to keep their GDP afloat.
For years.
Yeah. And that is how they actually have had GDP growth. It's not by creating something innovative or anything good into the economy. That is some part of it has happened, of course, but building ghost cities is not gonna save the economy, and that's coming back to hurt them now. The stock markets in China are down 25 to 30%. So they are really struggling. They're in bear territory for actual technical terms. And they're really, really struggling because they were creating one of probably the most epic debt bubbles in history by going from about 1 trillion to 40-50 trillion now that they printed into existence.
And worldwide, we're seeing that everything bubble, and stock markets around the world are seeing an inevitable end, at least what looks like it. The shutter shocks, I guess, right before it really comes down. Then again, central banks have learned a lot over the years and learned how to centralize things and prop things up a little bit longer. But that's very dangerous long term. It needs to come down sooner than later. But we're seeing housing bubbles all over the place. Banks faltering. We see the everything bubble affecting many of the very bankrupt banks around the world, especially Deutsche Bank, which, by the way, Berlin has a huge problem in the real estate market. And then we also have, the yield curve inverting in the United States. You got the stock market overvaluation, like I mentioned, the dollar crash, different countries swapping out of the US dollar. There's all these things adding up at the same time. The derivatives bubble, the pension bubble, the student loan bubble. It's gotten to that point where it's like we got so many things we're trying to juggle at the same time here at WHAM because it's just happening from all angles, and we're trying to stay as with it as possible as these stories develop. But with the housing bubble, John, I mean, it's so sad to see because, I mean, people don't learn. It's been just over 10 years. And it doesn't seem like people have learned from the fact that, like we just saw recently, over 1,000 people lining up for subprime mortgages. I mean, this is just a repeat of things we saw time and time again. And then every time we say, oh, look, this is happening, they say, oh, you're fear mongering. It's all just propaganda. It's nonsense. You guys don't know what you're talking about. Well, excuse me, but it's happened, I don't know, thousands of times. You'd think that people would not just yell, oh, well, they're liars every single time when we see it happen so often. So, John, I know this has been heavily centralized, heavily manipulated for a long time, and it keeps getting propped up more and more so. 2008 never ended. But how long is this possibly sustainable for going forward?
Well, be sustainable until the breaking point where there's no more debt to be borrowed out to anyone, where you hit that debt saturation level. You're pretty close now where you see people are struggling, even with the 0.25% rate hike in mortgages and other things around the world. You're seeing mass amounts of issues with all kinds of. Now you're looking at the Fed actually turned around. They come out with the December jobs report, which you got to remember, I don't think we mentioned it in the actual jobs report, but it came to me, December is when everybody's working because everybody's buying presents, so you have a ton of part-time workers that get added massively into the economy, which is going to lose their jobs when the buying binge is over and all that credit card debt is accumulated. So it's not a very good for the economy in total, but it's a consumption economy. We need to get more and more. But the major problem here is the financial education part, and nobody has been educated about how money works or how debt and how your house is not an asset, for example, unless you actually make more money than you pay out in expenses on your house. So a lot of that, like, people don't understand this, and they're seeing just something that raises in value. I actually had I have a friend of mine on LinkedIn. I'm gonna leave out his name, but he is a senior vice president at Morgan Stanley, and I asked him, listen, what do you think about my thoughts? Because I heard a lot about the trade wars and all these other kind of like stupid things about the government shutdown.
Market manipulation
of the issues in the world. I asked him, well, what do you think about I'm saying that debt is the real problem. That's why you're seeing all this chaos in the markets. And he's a portfolio manager. He said, debt is the problem, John. You're totally right. And this is what he's been talking about it for about a year now, saying how bad the debt is around the world and what a massive bubble we're staring head on. Meanwhile, he's trying to educate his people actually about getting into gold and so on. Very, you know, weird to see that in a bank situation, but at least he's an intelligent guy. He's read up on some
They got to cover their tracks,
history.
right? Because in the end, it'll come down on their heads if they're like, oh, just don't be safe, don't prepare, and then all these things happen, then they'll be out of a job. But I mean, obviously, we've been talking about, first of all, we should get that guy on, try and talk him into being on WAM. But it's really important to mention, like, last summer we spoke with Robert Kiyosaki again, which of course is one of our top videos. I think it is our top video. Yeah. And he said at the time, like, for the first time, he is selling. He's selling his property because he's like, it's so overvalued and people are offering me just ridiculous sums of money. Obviously, we need to get out. And I think a lot of the people I talk to, most of the people in real estate that I speak with are like, yeah, I'm renting. At the very least, I'm buying a place, fixing it up and selling it within a few weeks or a month because I'm not holding on to this property because it's too bubbled. Even in places like Las Vegas, where I am right now, people are scared, even though it's got such a massive amount of space to still build into. There's such a huge amount of demand coming to the city. People are worried overall, not just because of real estate bubbles, but the banking system as well. And, you know, the possibility of massive bank crashes in the near future, a dollar crash, all that, stock market crash. It all comes down to like a domino effect in the end. But I do want to go into solutions because that is always, like we mentioned so often, the most important part. I want to talk about, you know, how people need to be self-sustainable, independent, free, and decentralized. They need to be responsible. They need to understand these things, be educated. Food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. And something I really wanted to get into, because I'm proud to say we at WAM here are affiliates now with goldsilver.com. Mike Maloney is one of the most incredible people out there speaking about all these issues, from gold and silver and cryptocurrencies as well, decentralization, the problems of government, the problems of the banking system, and these bubbles all over the place. He's one of the most well-spoken people out there when it comes to this topic, this subject matter. We've, of course, interviewed him here at WAM before, and we've got an affiliate with him right now, and I want everyone to check it out because we're not just saying this because we got an affiliate. I'm saying this because we believe in their product. They have a great amount of wealth of, understanding of this topic and this subject matter. They have a great understanding of what people need to do, and they have a great understanding of history altogether, the monetary history, as John and I have been talking about for so long. But the link is goldsilver.com/AFF equals WAM. We will leave it below in the comments. It'll be pinned to the top of the comments. So make sure to check that out, because if you want to know info, if you want to get involved, and if you want to protect your wealth and purchasing power, gold and silver, folks, that is the thing that has protected people and given people wealth insurance for centuries throughout history, as every fiat currency has crashed. Every single one, going back to 1024 AD in China. This is not new, folks. We have learned from the problems. We should understand the solutions at this point in history. But of course, we aren't taught about money in school. We aren't taught about money in the media. And the reason for that is because that leaves people independent and able to take care of themselves instead of dependent on the government and the banking system, pushing them into debt, servitude, exactly where this system wants us, this system of organized crime. So goldsilver.com, check out the link below. We really want as many people to get involved in this as possible, because let's be as smart as possible, prepare ourselves going forward, get all the information necessary. And we got information coming from every angle here, and it's good to try and tune in on the people that are the greatest experts in this field and bring you the best information. So there's that. And then, of course, cryptocurrencies that are truly fundamentally valuable. Same with the blockchain infrastructure, if decentralized. We got to find how all the major opportunities and alternatives in this space, which will change the world forever. This isn't about the price today or the price tomorrow or the price yesterday. This is about technology that changes everything we have been forced into for all these years through legal tender laws, banks and governments. You can have a bank in your pocket. You can create alternatives to all these systems from the government via the blockchain. If you understand it, if it's decentralized, We got to be careful with that stuff. It's playing with fire, but that fire can easily burn the chains off, melt the chains that so many people unfortunately revere. So John, as we close this video off, what's your bottom line?
The bottom line is start to get educated, and good place is of course goldsilver.com, where if you become a member, actually, which I am, you get insider reports, so you get to see pre-market kind of what stuff is actually happening, and you get pre-warnings, so where to move next to, and so it's really great educational platform on top of, Mike Maloney's Hidden Secrets of Money, which is beyond probably the best ever documentary on money that exists. And then of course I would highly suggest that you take a look at my book Canada, the Greatest Economy in the World, where I actually predicted the debt bubbles that we've seen here in Canada, which has basically the two of them, top four is Canadian cities, and it was because of this stupidity of the Bank of Canada and this money printing. It's all about money printing, Josh. Isn't it interesting? You can bring it down to so simple of money printing to try to prop the economy up, and that's all that it is about.
People don't get that this whole cancer is created by that in the first place, that rotting carcass of debt and printing that we've seen coming from these organized crime cartels for centuries.
Yeah, no, I actually watched the first episode of Gonzo to promote Max Kaiser a little bit today, and it was funny. He was just running around in the street preaching, "This is fiat garbage." I really like that. That's exactly what it is. It's pure garbage. It's a Ponzi scheme. That's what today's monetary system is. And don't get fooled by the banksters and everybody else propagandizing you, like Donald Trump and everybody else, saying like, "Oh yeah, this is the time to buy the dip or get in, buy stocks. This is the best time in your history to do so." It's all about propping that system up, keeping the growth going, because if we get deflation, it's game over for the fiat Ponzi scheme, because you can't prop up a Ponzi scheme without more debt coming in from the bottom.
Yeah, it's all coming to its inevitable end. And speaking of Max Kaiser and his new show Gonzo, I'm hoping to do a video with him in the end of January regarding that show. I'm going to be seeing him at an event in Las Vegas. He's usually cool about that kind of stuff, so hopefully we can get something done on that. And then, of course, John and I are going out to Miami right away, very, very soon. It seems like, a week away or something. And we're going to be reporting on the North American Bitcoin Conference, which I'm very excited about. Incredible people there. We will keep you tuned in with all that's going on at that event. And of course, we are going to love the opportunity to be in a place like Miami, one of the coolest cities I've ever been, actually. I love the place. And be in the place where there's actually a huge housing issue there right now, which we'll definitely have to dig into a bit while we're out there. But it's a beautiful city and it's got nice weather. So sorry to make some of you kind of feel jealous there, but I'm looking forward to being in warm weather in January. It's always it's the best time of year to have warm weather.
Hey.
And of course, all of you make it possible for us to be able to go out to these events and cover these incredible issues and interview these amazing people, because we can't do it without you folks. When we are getting shadow banned today on YouTube, I look and we lost almost 8,000 views according to Social Blade, just randomly. We're down like 8,000 something views for the day. Very strange stuff happening. People getting unsubscribed, unliked. We're losing massive amounts of money we could be making in monetization because we're getting demonetized. All these things are happening and the viewers are keeping us alive, so I couldn't thank you enough. It's not like this is a big money-making business, but it's certainly good to make enough to be able to eat and continue making these videos, because we want to bring you the facts as much as possible, as up-to-date as possible on a daily basis here at WHAM, so we couldn't thank you enough. So anyway, John, I guess we'll be talking soon, and until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
be the change.
Like what you see here at WHAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below, as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a feature of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line YES, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.